Good evening and welcome to tonight's Strategy of the Week presentation titled How to Heal a Broken Portfolio. Last week, Dan Mish introduced our new Welcome tab and demonstrated how easy and important it is to create a watch list. Tonight, I'm going to follow up on Dan's presentation and show you how to fix a stagnant or even a damaged portfolio. Dr. DiLiddo has always said that watch lists are one of the most powerful tools within VectorVest. Not only can watch lists help you better manage your portfolio by weeding out the bad stocks that may be weighing your portfolio down, but it also helps determine what type of investor you are. In Chapter 11 of Dr. DiLiddo's little green book, Stock Strategies and Common Sense, he lays out what he calls the investment matrix. Let me show you that matrix. The investment matrix separates the four different investment styles. We can see we have prudent, aggressive, conservative, and speculative. And each are determined by the potential reward for investing in a share compared to the level of risk you're willing to take to receive that reward. And the breakdown here is determined by the relationship between relative value and relative safety. Let me first talk about these indicators. Both indicators are fundamental indicators and they're both on a 0 to 2 scale. Above 1 is good, below 1 is bad. Relative value measures the long-term price appreciation potential over the next 1 to 3 years compared to a safer investment in a AAA rated bond. So it's the long-term upside potential of a share. Relative safety is an indicator of risk. RS looks at consistency and predictability of financial performance. It also looks at a company's debt to equity ratio, their sales volume, how long they've been in business, price volatility, and a few other factors. Relative safety looks at how well a company grows their earnings quarter over quarter over quarter, year over year over year. So let's start with the aggressive trader or investor. The aggressive trader is ideally going to want relative value to be greater than or equal to 1 and relative safety to be less than or equal to 1. An aggressive trader wants that long-term upside potential, but he is willing to take on a little bit more risk. Aggressive traders want shares that have the ability to move up and down in price quickly, and when a share has an RS of less than or equal to 1, those stocks tend to move up and down in price very quickly. We'll move over to the conservative investor. If you're conservative, you want the RV to be less than or equal to 1 and the RS to be greater than or equal to 1. Well, you may be saying, why don't I want that long-term price appreciation potential? Why do I want RV to be below 1? Well, if you're truly conservative, you are more concerned with capital preservation than capital appreciation. You're willing to give up the upside potential for safety. High RS shares have established that financial track record quarter over quarter, year over year. They're much less likely to fall 10-15% in a day, and high RS stocks will go up steadily over time. If you're prudent, you really want the best of both worlds. You want the long-term upside potential, but you're really not willing to take on a lot of risk. So you ideally want RV and RS to be above 1. That brings us to speculative. If you're a speculative investor, you're not concerned with fundamentals whatsoever. You're very news-driven, and speculative investors are investors that really like to short stocks. So again, if you're not concerned with fundamentals, you're okay with having RV and RS less than 1. And this right here is very important for you to understand. You may think that you're one type of an investor, but the types of stocks you routinely hold in your portfolio paint an entirely different picture. Let's now move into the program. I'm going to move us from the home page. I'm going to click on the Viewers tab. That's going to bring us to our watch list section. I've already created a group for us tonight at 00 SOTW, and I have created a watch list as well titled Healing a Broken Portfolio. I'm going to click on this double left arrow to give us a little bit more room. Just going to resize the columns a bit. When you create a watch list, any watch list that you create, the stocks are immediately sorted by our master indicator called VST. The stocks are not put in here in a random order, like maybe with your broker's website or any financial website that you can add a list of stocks. The stocks at the top have the best combination of value, safety, and timing, And the stocks at the bottom of the list have the worst combination of value, safety, and timing. And I'm going to talk about some of the indicators that we see here in the spreadsheet, and I'm going to move from left to right. The first set of indicators are industry standard. You'll get these indicators whether you go on your broker site or, again, Yahoo Finance or any financial website. You first have the company name, you have the symbol, you have the exchange that the stock is traded on, and if there is an X next to that exchange, that means the stock is optionable. We're looking at the closing price here on the 5th of July. We also have the dollar change and the percent change in price from the previous day's close. So again, this information you are very familiar with. The next set of indicators are very specific and unique to VectorVest. First, we have value. Well, you've heard value before. A lot of other companies and services calculate what they feel the value of a company is. Well, in VectorVest, value is computed from forecasted earnings growth, forecasted earnings per share, profitability, and two factors that are, again, very unique to VectorVest. We incorporate current interest rates and inflation when computing value. And one of the first things that VectorVest believes every investor should know is what a share is really worth. So at the top of the list, we have Flight Center. We could see it closed today at $41.03. We think it's worth $47.72. So that's a very good start to your analysis. It doesn't stop there, though. You have to continue with our other proprietary indicators. I've already talked about relative value and relative safety. Remember, they're fundamental indicators. So with an RV of 1.41, we feel that Flight Center is likely to outperform a safer investment in a AAA rated bond by 41% over the next 1 to 3 years. Relative safety is outstanding at 1.56. So by looking at these two indicators, we know that this company is fundamentally very sound. The next indicator is RT. It stands for relative timing. Relative timing measures the share's short-term price trend. Also on a 0 to 2 scale, above 1, the share is in an uptrend. Below 1, the share is in a downtrend. So not only is this share fundamentally sound, but it's also rising in price. It's also in an uptrend. We combine relative value, relative safety, and relative timing to give us our VST vector indicator. VST combines the fundamental valuation with the insights of technical analysis into one single comprehensive indicator, and that's how this list of stocks is ranked. I'm going to get to recommendation in a second. Let me move over to our stop price. VectorVest puts a stop price on every stock every day, and our stop price is an adjusted 13-week moving average of closing prices, and it's adjusted for the fundamentals of the company. So if a company has good fundamentals, we will lower that stop price to keep you in that good stock longer. We don't want to bounce you out of fundamentally sound stocks quickly. We want to keep you in them as long as possible. If a company has poor fundamentals, we will raise that stop price to get you out of that bad stock sooner. So again, the stop price is an adjusted 13-week moving average. And that brings me to the recommendation. And I'm going to start with our sell rating. We could see that AMP has a sell recommendation because one thing has occurred. The price of the stock is below our stop price. So if ever the price of a stock falls below or is below our stop price, we will give that stock a sell rating. For a stock to receive a buy, it's a little bit more difficult. The price of the stock has to be above the stop price. The relative timing has to be above 1, so the stock has to be in an uptrend. The VST also has to be above 1, so there has to be some fundamentals behind that uptrend. And also, the price of the stock has to be diverging away from the stop price. For a stock to receive a hold, well, the price of the stock has to be above the stop price, but one of the other three factors to receive a buy are not met. In this case, since the RT and the VST are above 1, this stock's price is not diverging away from the stop price. So forget about spending hours a day on each stock in your portfolio. We do the work for you so that you don't have to. And it really only takes about 10 seconds to analyze any stock in the VectorVest database. And earlier, I showed you that investment matrix and how to determine what type of investor you are based on the relative value and the relative safety indicators. So if this was your portfolio, all you need to do is go down to the bottom to the watch list average. You could see the average price of our portfolio here is 21.21. The average value is 21.78. So our portfolio as a whole is fairly valued. The average RV is 1.21. And the average RS is 1.30. So we would be considered a prudent investor based on the types of stocks that we currently have in this 15 stock portfolio. The average RT is at 1.15. So overall, our portfolio is in an uptrend. Average VST of 1.23, that's good. Average earnings growth rate is at 13% over the next 1 to 3 years. Our average earnings per share is at 1.29. We're even collecting some dividends as well. We can see the average dividend yield is 2.72. So overall, a pretty good portfolio. And if this was your portfolio, you most likely did your homework and you analyzed these stocks for their fundamentals. You favored high VST rated stocks. Well, we feel that VST is a great indicator for determining which stocks to buy, but now that you own them, you're probably not concerned so much with their value and safety anymore. The most important thing to you right now is, are you making money or are you losing money? Are these stocks in your portfolio going up in price or are they going down? So you're more concerned with their price trend. And fortunately, we have an indicator that looks at a share's short-term price trend, and that's RT. So what you should do is come up to the top and simply click on the RT column header. And what that does is it resorts or reshuffles the list by short-term price trend. I'll resize the column just a little bit more here. So the stocks at the top of the list, the ones with buy recommendations with a high RT, those are the stocks that are making you money. You really don't have to concern yourselves with those stocks at the top. It's the ones at the bottom where your work is needed. And the first thing that you want to do is you want to identify stocks that have an RT of less than 1. And all you have to do is start at the very bottom and work your way up. So let's analyze the bottom stock here. We can see clearly it has a sell recommendation. Well, AMP has a price of $4.28. We think it's worth $4.58. So far, so good. Relative value is excellent on a 0 to 2 scale, so it's likely to outperform a AAA rated bond by 46% over the next 1 to 3 years. Relative safety is also good, so it's an undervalued stock with pretty good fundamentals. However, the short-term price trend is down. It's got an RT of 0.78 and it has a sell recommendation. What I'm going to do from here is I'm going to look at a few graphs of these bottom stocks. And I'm going to give you 4 tips to help you determine when you should sell a stock. I'm going to right click on the bottom share here and select View Stock Graph. Okay, so what we're looking at here is the price of the share up at the top in candlesticks. The white line is a 40-day simple moving average, and the relative timing of the share is at the bottom. We're looking at end-of-day data over the last 1 year. So we can see this stock had a great run at the end of last year, beginning of this year. The first tip, and one of the first things that you're going to want to do when you open up a stock graph, is identify the stock's volatility and overall price trend. Well, we're looking at the last year, so the overall price trend we can see is up. Price currently is $4.28. Back here it was in the high threes, just about $3.88. So overall, over the last year, the stock's in an uptrend. Is volatility conducive to your investment style? Well, remember, if that was your portfolio there, you're a prudent investor. There's not a lot of volatility here. The stock did pull back in February and March, had a nice little run again until its recent pullback here in May. So is volatility conducive to your investment style? Number 2, an early warning signal that may help you determine when to sell is when the price of the share falls below its 40-day simple moving average. That's going to throw up a red flag and give you an early warning signal of possible trouble to come. So when price crosses below its 40-day moving average, you can see it did it back here in March, consolidated a little bit, and did have a nice little run here. Notice though that the relative timing, even after this pullback, never crossed below 1. Well, after price crossed below its 40-day MA here, it crossed below 1 on the 5th of June, right about $5, about $5.03. So tip number 3 is when the relative timing crosses below 1, that's letting you know that the share is now in a downtrend. And not only that, I want you to take a look at something. I'm going to draw a couple lines here. Notice the overall price trend from this point to this current high. So the price recently here on the 15th of May hit a new high of $5.79. Look at the relative timing. Relative timing on that day actually hit a lower high. So this is what's called a bearish divergence. This is telling us that the price trend here, the upward price trend, is losing steam. It's losing momentum. It's not rising at the same rate that it did back here. RT was still above 1 here, but it started to hit a series of lower highs. So not only did it fall below 1 here, this is another early warning sign telling you that the short-term price trend is dissipating. And then finally, the fourth tip is when the share gets a sell rating from VectorVest. That should be your last line in the sand. The price is now fallen below its 13-week moving average. The RT is below 1. The price is below its 40-day moving average. These are all signs to help you determine when to maybe sell a position. Remember, it's a good company. We looked at its value. We looked at its safety. One thing I want to point out here, if we take off RT, put on earnings per share, this concerns me a little bit. You could see that earnings per share has steadily falling over the last few months. So it looks like there's something internally wrong with this company currently. You want to learn to take your profits and move on when you see a situation like this. Let me close out of this graph and I'll take a look at the other share with an RT of less than 1. It has a hold rating. It's not yet a sell, but it's overvalued. It's got a price of $20.37, value of $13.38. It's got poor fundamentals. RV is less than 1. RS is less than 1 as well. And it's got an RT of 0.90, so we know it's in a downtrend. And we're looking at ORI. Let's take a look at a graph here. Earnings is just recently starting to rise, so that's a good sign. However, it has fallen off dramatically over the last few months. Let me take earnings off, put RT on. Well, we can see recently when price crossed below its 40-day moving average right back here at the beginning of March. RT crossed below 1 not too long after that on the 18th of March. Remember, overall, we're looking at volatility. We're looking at the long-term price trend. We could see that it's clearly down. Price closed today at $20.37. It was at $25 a year ago, so the overall price trend is down. Price has crossed below its 40-day moving average twice over the last several months, and RT has consistently stayed below 1 during that time as well. And also, we gave this share a sell rating on the 20th of March, right around $23.66. So there have been multiple signs here or multiple opportunities for you to get out of this position. I'll close out of that graph. So again, what you want to start to do is resort your watch list by relative timing. Take a look at the bottom stocks in that list that have an RT of below 1 and work your way up from there. And after you identify that those are the stocks that may be weighing your portfolio down, you need to get rid of them and replace them with top VST stocks with better fundamentals that, most importantly, are rising in price. Well, this concludes tonight's Strategy of the Week presentation. Have a great weekend, everyone.